trading because Mad Money's Jim Cramer is here. And are you linking into this LinkedIn stuff?
First of all, I want to say it's very inexpensive. And it's a great buy.
That was a joke, right?
Yes. This is the most outrageously overvalued, ridiculous thing that I've seen since CBS Market Watch or the Globe. It's preposterous. It's bad. I am not a guy who talks about bubbles.
Tell me why it's bad.
Well, because it's $10 billion. It's probably worth, because they did a little sliver. They did a little sliver.
Right.
And that got everybody stimulated. That's the same game they played in 19.
It's going to lure people in, and then they're just going to be burned.
And
is that what you're saying?
Yeah, we're going to do another one of these things where we destroy everybody. And as a protector of the asset class, which is how the hubris that I carry, to me, I see it happening again, and I'm like helpless to stop it. It's a toxic way to price. It's a terrible thing to do. They get away with it. They'll probably call my bosses and say, that was outrageous that you attacked us. But, Mandy, I was worth $360 million one day, the day that Goldman did a sliver of TheStreet.com.
Right.
So we've heard a lot of people talk, and they've said, how about this deal, how about that deal? I was the founder of a company that went through this process, and I was screaming to the Goldman Sachs desk, don't do this, don't do this. It's in Confessions of a Street Addict, please, because it made it so that people were never able to come out whole. It's going to happen again. I wish the government were not so laissez-faire. This is almost like the Bush administration again. This is a travesty, and it shouldn't be happening.
But mind you, okay, if indeed this does end badly, well, then it might actually start bringing back down to earth some of the valuations that are being thrown out for potential IPOs for, say, Facebook and Twitter and Groupon or whatever.
But it won't until the secondary. See, because as long as there's that little stock out there, it won't happen. It was the secondaries that destroyed that's what caused the dot bomb to blow up in 2000.
But back then, anything with a .com in its name, even if it didn't have any customers, for example, was doing amazingly well at the start.
I don't care that this company has earnings. I mean, that doesn't matter.
This has got 100 million users. I'm just playing the devil's advocate here. I mean, I don't know.
That's your job.
I'm playing the devil's advocate. People are saying we've learned our lesson. It is different this time.
Well, look, I like Netflix. $12 billion. It's just a little bit bigger than this.
And it's cheap compared to LinkedIn.
Much cheaper. 24 million customers. Very good growth. Very profitable. And this is making a mockery of Netflix. It's a mockery. And people who've attacked me on Twitter and everywhere else for supporting Netflix, I say take a look at this thing, of which I don't even know people who like it. I don't know anyone who doesn't like LinkedIn.
What about Cnbc.com?
Doesn't like Netflix.
Cnbc.com, which is China's biggest, what do you call it, infotainment web portal.
It's the Twitter.
What you like.
It's the Twitter. I've been recommending it on the show. I've been anxious for it to go higher so I can take the recommendation off, because I'm recommending only one stock in China, Baidu, for an investment. I've been recommending Sina for a trade. But you know what? I feel very uncomfortable recommending any of these stocks that are starting to levitate like this. You know what? They're all going to work for a while. They are. And people are going to say, Jim, why didn't you put us in Groupon?
A lot of the China internet stocks aren't working anymore, are they?
But I just think when I see this, look, I have often been criticized for not seeing bubbles that are like the gold bubble. I don't think gold's a bubble. There's tremendous demand. We're only finding 1% more of gold each year from the ground. There's not a lot of supply. This kind of thing with LinkedIn, I can tell you, they did, if they had done like Bob Pisani said and done a lot of shares, but no, they wanted to create this pop. They wanted to stimulate. This is exactly the playbook from 1999. Now, if we had an SEC, we do have an SEC. What I would do is I'd call these guys in and I'd say, listen, guys, come on, we learned our lesson. Don't do those sliver deals. They're bad. It gets people too excited. It causes froth. But the government always hides behind the 33 and 34 Acts, where it says there's nothing in there. It says that they should discourage froth. But it is absolutely a travesty, and it's going to end very badly. And I feel badly that it's happening all over again after having survived it with TheStreet.com.
I'm absolutely loving that you're putting a little bit of calm sobriety, into the conversation.
If I had a voice, you probably would really hear some sobriety. Now, just so you know, again, I am speaking from experience. I am probably one of the, TheStreet.com, there were 300 companies that came public during that period. Only a handful are still around. The Street is. I'm not recommending or not recommending. I am just saying I have seen this and I lived through it, and it's horrible and it should be stopped. And if we had a government, they'd come out and say, stop this. Don't do these sliver deals. It's wrong.
There goes the calm. What? There goes the calm. Okay, you should have held that thought. Jim, thank you. And tonight on Mad Money, hopefully your voice will be back up and